Welcome to this new episode of Your Next Trade, where today we're going to be talking about many things, starting with the FOMC meeting on Wednesday. We're going to be talking about AI. We're going to be talking about option expiry, VIX expiry. But let's start with the most important thing for the week, which was Oracle. So we had Oracle results on Wednesday evening after the close, where as a prophecy, as an Oracle prophecy, they have been telling us that AI is still booming. So 2 weeks ago, I mentioned that the AI infrastructure was probably down after the NVIDIA numbers. So still we're going to have growth, but the growth coming from infrastructure was slowing down. And what Oracle was saying for this week, which was very interesting, is we are moving from training to inferencing. So if you look at what Oracle is calling remaining performance obligation, which is more or less RPOs or backlog, as you can see in this chart, we saw that from the last quarter, we went from 138 billion backlog to 455 billion. So, wow. Fantastic. Whoa, it's like AI is on fire. But there is a catch, and there's a significant one, which is the biggest customer of this 455 billion is ChatGPT, which is making, according to the Wall Street Journal, 300 billion. So if you deduct 300 billion from this 455, guess what? You're going to have 155 billion, which is more or less the trajectory that you had before. So you now need to take the assumption that based from Oracle, ChatGPT in the next 2 years until 2029 is going to be investing with Oracle 300 billion. But guess what? This is what was announced in January through Stargate. I don't know if you remember, that was the big meeting that we had at the White House with Trump. We had the Oracle CEO, we had the SoftBank CEO, we had the ChatGPT CEO, where they said they're going to be investing more than 500 billion. So it is clear that AI is still on fire, that there's still going to be a lot of capex. But there are some question marks about first, how ChatGPT could be doing this capex, how they can be raising that much money. It has been pretty hard for them to raise 100 billion, despite, the lot of noise coming from SoftBank. I strongly advise you to do a bit of Googling of the history of SoftBank in the past and how they have been pumping and dumping stuff, especially in 2021. So even if the market like it pretty much, that is pretty interesting. What, as a trader, I want to go through, it's more important is we go from the first phase, which is infrastructure, which is going into the second phase, as I said, which is inferencing. And inferencing is more or less so far, if you look at the AI models, it was mostly about training those models. Now, as we are going into the second phase, it's mostly about making sure that those models are going to be responding to questions, to tasks. And this is more or less robots. This is why, for example, you get Tesla that has been so strong for the week, more than 10%. You need as well to go into the second phase of infrastructure, meaning more GPUs, more different stuff actually that we had for NVIDIA. This is why you got stocks like Micron. We had SanDisk that were very, very strong. And I think if you look as well in Europe, there is some trades, probably the wafers, the companies that are doing the wafers. So if you get some exposure to Germany, this is the names. I think this is the next trade because Micron and SanDisk moved very, very well. But it's quite important to look at what the market is telling us, what AI is telling us, that we are moving from the first phase to the second phase. As I said, can we 100% rely on this Oracle prophecy? I don't think so, but the trend is still very, very strong. So if we look at the week-to-date asset performance, starting with the stocks in the left-hand side, you see that the S&P is up 1.6%. You remember or not that the expectations were for plus of minus 1.2% as of last week. So pretty strong market. Again, technology, Nasdaq outperforming the overall market. Russell slightly up for the week. You see that Japan is very strong. This is the same story that I mentioned. SoftBank has been on fire. This is a chart that I put on Twitter. So very, very strong week. But overall, the blue, very, very strong, with emerging market as well being strong. Dollar kind of sideways where we had actually a bit of move versus the Chinese second derivative with the Australian dollar and the Kiwi. Very strong Bitcoin, Ethereum jumping 7% and Bitcoin up 4% for the week, and for the commodities as well, pretty strong. So risk on all across the board, and this is the same picture that you have from the week to date industry performance, where you have the S&P here, the Nasdaq, but as you can see, you get more losers as industries than winners, because the big weightings, we are talking semiconductors, we are talking cloud, we are talking technology, social media, utilities with the infrastructure, have been really pushing the market higher. So this is pretty much the same market as we had since April, where you have a strong push from all those names. We're going to see later that as well retail, the names that have been pushing by retail, we are talking momentum stocks, have been very strong. So the Momo stocks, the high beta Momo stocks were up 10% for the week. Left hand side, solar, water, home builders, which the week before home builders had a strong week. So sector performance, we see that anything that is defensive is not working pretty well. We are talking consumer staples and materials, but IT very, very strong, utilities and telco. This is same picture as we had over and over. What about rates? So big move in rates. So we had the CPI and the PPI for this week. So despite the CPI being higher than expected, so the core CPI was up 0.35% month on month and 3.1% year on year. So like really way above the target, but the market is saying, we don't care, it's already priced in, at least for the time being. And we went to below 4% on the US 10-year. We jumped on Friday at 4.07, so a bit above the 4%. As we saw before, we broke not the trending range, but the range that we have for quite some time between 420 and 450.60 on the 10 years most recently. Fed funds expectation. So this one is really important because we have the Fed, the FOMC meeting on Wednesday, where the Fed is expected to cut by 25 bips, so it's 100% chance that they're going to be cutting. Last week we discussed the potential jumbo cut of 50 bips. The market is now saying it's not going to be happening because you're still going to have CPI. And if you price and if you look at what is priced for the rest of the year, market is pricing cut in September, cut in October, and a cut in December. So 3 times 25 bips. But as you can see, if you compare the last one versus the last FOMC meeting, you see the massive move that we have from December to December, where the market a month like 6 weeks ago was pricing 40 bips less than it has been pricing now. So really big move, where instead of pricing 1+ cut 6 weeks ago, now we are pricing 3 cuts. So really the market expecting a much more dovish Fed. And I want to flag as well, what is the terminal rate? So where is the floor for this Fed fund rate? And as you can see, it's roughly around 3%. And I've been flagging over and over that the 3% target is the new 2%. So if you've done a bit of 4x4 video series, for example, you do know that in the mandate of the Fed, the target for inflation is at 2%. And now, as you can see, market is saying, no, we're going to have a floor that is much higher than before, and it's going to be at 3%. So these days, as we have CPI at 3.1%, it's more or less the market is saying, we're fine with it. What about the VIX, the volatility? This is very much compressed volatility. 30 days, 9 days is pretty much compressed, below 15% for the VIX. This is very much the same picture as before. So I want to go into technical analysis and spending a bit more time than usual, starting with the S&P futures. And as you can see, the trend is your friend. It's making new highs after new highs. We have not seen any correction since the start of April. So pretty much the same picture. It's the same as well if you look at the Nasdaq. We are talking 24,000 and above now, making new highs. So very, very strong market. I want to flag, so we discussed gold before making new highs and the breaking higher, the breakout that we had That was 2 weeks ago. Very strong since then. We are now at 36.40, 36.60. In terms of Oracle, so that has been obviously the Oracle prophecy, telling us that the world is going to be bigger into AI, that's going to be a lot of money spent. And as you can see, massive gap up. We are talking 40% for the stock. That was on Wednesday, Thursday, Friday. You see this massive move, massive volume, and the follow-up as well. So a big gap. Since then, the market, a bit of correction for Oracle from the high. So if you've been trading the breakout, this is always a tricky one. So SanDisk, this is the second derivative of what Oracle has been saying with this move from training into how to respond for the AI to new robots to demand. And as you can see, Micron, SanDisk, but if you could check looking as well at Micron, pretty much the same chart. So very, very strong move for those names. As I said, I think there are some interesting names, not ASML, but some wafer companies that have exposure to Micron and SanDisk that are in Germany, for example. So let's look now into going back into this week, what happened for the week, looking at the S&P futures for the last 5 sessions. As you can see, we trend higher and higher. So what I want to flag is this one, is this move on the day here. This is the CPI. So the market has been saying CPI, core CPI, ticking higher, 3% above the expectation. It's a done deal. It's priced. I don't care. We moved higher. And there was, so we moved from the 6,500, which was a strong level due to the JP Morgan collar at 6,505. So we managed to move away from that, and we moved quite aggressively into 6,600. There were tons of calls that were bought for the 6,600. So inflation higher for the CPI, lower for the PPI. Weekly claims. So that was one of the reasons as well as on Thursday we moved big time, because if you look at the weekly claims that come out on Thursday, 1 hour before the opening in the US, before they were around 235,000 weekly claims. This week they were at, I think, 265 or 267,000. So more or less another signal that the job market is deteriorating. That might be a one-off, but the next confirmation is going to be happening the day after the FOMC meeting, so that will be too late. As I said, Oracle, that was obviously one of the biggest drivers for the week. The whole space, we are talking AI, we are talking NVIDIA, tech, semiconductor, was jumping higher. Another one that I want to flag is Open. That is a stock that has been trading and has been the momentum, the Momo for retail traders, like a meme stock. As I mentioned for the week, momentum was up 10%, so very strong week. Anything that has been massively shorted like tech has been outperforming the market. So retail traders are in control, and one of the biggest signals that you can see here is Open. So I gave you 3 charts here. The first one is the level of options, call options that have been trading on the names. As you can see on Thursday, we are talking complete craziness. Second one is the number of stocks that were trading as well on Thursday. We are talking 1 billion stocks that were trading on the day. That was more than 100% of the market cap. Why? Because the retail traders, when they go like a herd, and they are massively buying the stock. Third, it's the same. It's coming from Bloomberg, where every single day, but you can do the same on different websites, looking at what are the most options that have been trading. And as you can see, between the big names like the usual NVIDIA and Tesla, you have Open, where the call 10 traded 225,000 options on lots on Thursday. But as well, as you can see, Tesla is back. As I said, this is something interesting, not only because the board of Tesla gave to Musk a new contract, but as well, my conviction is, as we are moving into the AI 2.0, the second phase of AI, as Oracle was mentioning, we are moving from training into inferencing. It's mostly about robotics. It's, how those AI models will be answering the questions and be active to us. And obviously Tesla is expected to have big exposure. So you could see Tesla, as we saw over the last few days, where you had tons of calls, 400, I think the stock closed at 395, so very close, that is pushed again by those calls. So this is the high beta Momo Tesla. Finally, looking at the catalyst for the week, so very, very strong week, tons of things, probably one of the most busy week of the year. So let's start with a lot of bank central decision. We are starting obviously with the FOMC rate decision on Wednesday. The expectations are for a cut of 25 bips. It's going to be very important to listen to the call after to the press conference, trying to get a better picture of what are the moves going forward. Is going to be as well cut in October and December. As always, like any central bankers, and it's going to be the same for the Bank of Canada on Wednesday, the Bank of England on Thursday, and the Bank of Japan on Friday. They're going to tell us the same as usual. They are data dependent. But guess what? If they are data dependent, there is a bit of a question mark with CPI, with inflation, with the PCE. So important meeting on Wednesday. As you can see, on the same day at the open, at the open of the US market, there is a VIX expiry. So VIX futures, which have been heavily shorted. If you look at the commitment of traders, you see that positioning have been heavily into the short side. And as well, you probably saw or not that over the last expiry. So go back, look at the CBOE VIX expiry that happened on Wednesday on a monthly basis. Most of the time, just on the day or the day after the VIX, there is a spike in volatility because there is a readjustment of position. Same on the same picture, VIX expiry, we do have like the options expiry on Friday and the index rebalancing at the end of the session. So for the option expiry, I just had a look at how in September was the OPEX weeks most recently. As you can see on expiry day, which is on Friday, if you look at the last 6, it has been pretty bad on the Friday. We might expect, the market to be struggling. On the week as well, a bit of struggling most recently. So despite having a strong momentum going into expiry, this week has been more of a struggle most recently. As I said, FOMC rate decision. So this is the S&P performance FOMC day. Bit of volatility. That's going to be interesting to see just the day before what is implied volatility pricing versus realized volatility. Macro, as always, we're going to have retail sales. So far, the US consumer, as always, is king and doing very, very well. It's still making 70% of the GDP. I looked at an interesting one for the GDP because I want to do, if I'm not too lazy, an AI webinar to see where is the growth from the GDP coming, and you will be very surprised to see where it comes from. A bit of housing start and building permits as well, the weekly claims, that's going to be important versus last week. And finally, what is the move expected? Despite all of this, we are talking, FedEx as well on Thursday, only where Goldman Sachs is coming with an interesting trade with options on FedEx with a bit of bearish view. But more or less, we're going to have tons of things with retail, with central banks. We're going to have as well the different expiries. And despite all of this, volatility is pretty much compressed at plus minus 1.2%, which is more or less what we had for this week. So despite all of this, despite this low volatility, expect to have some good trading opportunities. We are talking, as I said, the AI second phase. We are talking special situation with the VIX expiry. We are talking the option expiry with different timing on Friday and the index rebalancing and the FOMC rate decision on Wednesday. So this is it for me for this week. If you get questions on the 4x4 video series, and if you want to do exactly what I've done today, you can subscribe to the 4x4 video series where you're going to have access to 30 plus videos. We are talking tons of Excel spreadsheets that you can download. Then you can have access as well to the Discord community where we have one free channel and we have more than 30 channels beyond the paywall where it's only $75 a month. But if you want to subscribe, feel free. Any questions, you can reach me at greg@duponttrading.com. This is it for me for this week. Have a good trading week. Bye-bye.